order. Welcome to our witnesses. Senator Hyde-Smith, thank you again to you and your staff for working so closely together with us to organize this hearing all this week. And I know that Chair Stabenow and Ranking Member Bozeman will be joining us at some point. I want to thank them and the full committee staff for their help and support in convening these committees hearings this week. And thanks to everyone for attending. So this morning, we conclude our two-part hearing. Earlier this week, we focused on Title I of the Farm Bill, the commodity title, and we had a very useful and productive discussion with producers and farmers, as well as with the presidents of the American Farm Bureau and the National Farmers Union. And today, we'll be talking about Title V, the credit title, and Title XI, the crop insurance title. And we're going to have an opportunity to hear directly from practitioners and implementers of crop insurance and farm credit programs. And as I mentioned earlier this week, hearing directly from you is incredibly important. As the folks that are closest to the work, you know best what's working and what we can do to make it work better. And I know that all the members of this committee share the goal of passing a bipartisan farm bill authorization this year, a bill that meets the needs of American farmers and ranchers and producers in every part of the country, and a bill that meets the moment. Farmers, ranchers, dairy farmers, poultry and livestock producers are at the center of our economy, our food system, and our national security. There is nothing more important to our country than a stable, secure, healthy food supply. And we need to support farmers with credit and risk management tools that help them weather the inevitable ups and downs that happen in agriculture. So today, although commodity prices are good, farmers face a lot of challenges. Too many producers are struggling to cover their operating costs, and this is especially true for small and medium-sized farms. According to the USDA, nearly 50% of farms in the United States have negative farm income. The high levels of concentration in the ag sector combined with supply chain disruptions has driven up input costs, which are now outpacing commodity prices and putting farmers, again, especially small and medium-sized farmers, in a real bind. And climate change and extreme weather events are increasing risk for farmers as well as they deal with drought and floods and wind and hail and also increased pest threats. And last of all, global disruptions, both wars and trade disputes, add to the uncertainty. Farmers are creative and adaptable, but they need access to credit to grow their operations, and they need sound risk management options to help mitigate the losses that are out of their control. So credit and crop insurance programs are essential all across the country and in my home state of Minnesota. Last year, Minnesota farmers insured 17.8 million acres and participated in many of RMA pilot programs and dollar liability programs. Over the last year, my staff and I have held over feels like dozens of Farm Bill listening sessions across the state. And we have heard from everyone that crop insurance needs to be there to help secure operating loans as well as when there is some other kind of risk that they're facing. And we have also heard that there are sometimes gaps, that not all risk management programs are working well for smaller operations and specialty crop farmers, especially produce farmers. Some programs are sometimes hard to use, and a tweak here or there could really help. And when it comes to accessing credit through farm credit institutions or community banks, smaller operations, beginning farmers, farmers of color, and indigenous farmers often struggle to find a way to access that opportunity. So that's what this hearing is all about. It's an opportunity for this subcommittee to hear directly from you about what's working, what's not working, and what we need to do to improve insurance and credit programs. There are a few issues in particular that I'm interested in hearing about today. I'm going to ask you, what are your top 1 or 2 priorities for the Farm Bill's credit title or crop insurance title? I'm interested to hear you talk about what we can do to make risk management and credit programs work for beginning farmers, smaller producers, and non-traditional producers. And I'd like to hear your perspective on how the consolidation in agriculture from everything from seed and fertilizer to processing affects the farmers that you're working with. So I really look forward to hearing from all of you about these issues and more, and I look forward to a productive discussion. And I now turn to Senator Hyde-Smith.
Well said. I could not agree more. Good morning, and thank you also for holding this very important hearing today. And I want to thank Senator Bozeman, our ranking member here,
Welcome,
for your interest in the subcommittee, and I think we'll be joined by Senator Stabenow as well. But I'm pleased that we are meeting again to continue the hearing from stakeholders about their priorities for the 2023 Farm Bill. When people have asked me about the Farm Bill, I've said, well, we flipped the coin, but the games haven't begun yet, but now they have. We're at a different stage, but it is clear from the producer input we received on Tuesday on Titles 1 and Title 11 of the Farm Bill that we need to be protected and strengthened. Today, we will hear more about the importance of crop insurance. Additionally, we will hear about access to credit, which I say all the time is what makes the world go round in our farming world. The private sector is the cornerstone in the delivery system of crucial risk management tools and credit options. I look forward to hearing from our witnesses who will play vital roles in private sector helping farmers access these tools. I would also like to extend an especially warm welcome to our two Mississippians here today, Mr. Philip Morgan of Ridgeland and Mr. William Cole of Batesville. Agriculture is the largest industry in Mississippi, and every American, whether they know it or not, has a vested interest in agriculture because every American has to eat, the last time I checked. Farmers face many challenges in managing risk and securing credit. As we heard from our producers on Tuesday, market fluctuations and rising input costs have significantly affected the ability to run a business and to stay afloat. With transportation and logistics systems disrupted by recent global crises, farmers and ranchers have faced a number of challenges in getting our products to market. This has resulted in significant losses for many agricultural producers who have been unable to sell their products or forced to sell them at a reduced price. Another challenge has been labor shortages. Boy, I hear this from everyone. With many people unable or unwilling to work, agricultural producers have been left without the necessary labor to plant, harvest, and process their crops. This has resulted in significant losses for many farmers, and this is very real, as they have been unable to get their crops to market and forced to pay significantly higher wages to attract workers. All of these challenges have highlighted the importance of risk management and credit in the agriculture industry. With increased uncertainty and volatility in the marketplace, we must ensure our farmers and ranchers have access to the necessary tools and resources to manage these risks effectively. Similarly, in light of inflation, it is more important than ever for agriculture producers to have access to affordable and flexible credit options. Farming is a risky business, especially in Mississippi. Mississippi farmers are faced with floods, tornadoes, and some of the worst weed and pest threats in the entire country. This is why risk management is so essential. When I talk to Mississippi farmers, I'm always inspired by their resilience. Farming is not just a job for us, it is our way of life. They want to produce more affordable food and fiber for our country now and be able to pass down their way of life to the next generation. Farmers have to borrow a lot of money. They lose sleep at night thinking about the debts they incur to start or continue farming. In order for the American food supply to remain abundant, for the farmers to stay in business, credit must be accessible, but it must be flexible as well. And in order for more young people to start farming, they must have that access to credit. As this committee considers the 2023 Farm Bill, we must remain mindful of the needs of the next generation, not just ourselves. Our witnesses will provide valuable insight into the challenges and opportunities ahead for our agriculture producers and the industry professionals who support them. Thank you again, Chairwoman Smith, for convening this hearing, and I look forward to a productive discussion on how we can work together to ensure that the livelihood of the American farmer remains viable in the face of these challenges, but also opportunities.
Thank you so much, Senator Hyde-Smith. And I would like to welcome to the subcommittee our chair, Senator Stabenow, and also our ranking member, Senator Bozeman. Thank you so much for joining us. And we will now begin with witness introductions. And I believe that Senator Ernst is going to be introducing Mr. Barker, your fellow Iowan. Please go forth. Mm-hmm.
Thank you, and want to welcome all of our witnesses today, but I have the honor and privilege of introducing Mr. Gus Barker, Verlin Gus Barker. And Gus serves as President and Chief Executive Officer of First Community Bank in Rockwell City, Pomeroy, Fonda, and Newell. Gus also serves as Chairman of the Independent Community Bankers of America's Rural America and Agriculture Committee, which represents community bankers serving rural America and agriculture across the nation. Over the years, Gus has been active with numerous civic and charitable organizations. Gus grew up on a family farm in northwest Iowa, just south of Pomeroy, and graduated from Pomeroy Community High School. He went on to get his BA in accounting from Buena Vista University and graduated from the Graduate School of Banking in Madison, Wisconsin. Barker is a career banker with over 46 years of experience. As a survivor of the 1980s ag crisis, Gus has experienced the ups and downs of agriculture's cyclic nature firsthand. He has worked tirelessly to maintain that sacred trust between the bank and the customer, no matter what the economic conditions are at the time. Gus's passion for community banking is staunchly evident as he has consistently sought to defend the importance of preserving the community bank model. Thank you, Gus, for being with us today. Thank you, Madam Chair.
Thank you. Now Senator Hyde-Smith will introduce Mr. Morgan.
I am excited to introduce Mr. Philip Morgan, the President and CEO of Southern Ag Credit, based in Ridgeland, Mississippi. I get a lot of mail from you. Southern Ag Credit serves farmers and ranchers in 50 Mississippi counties and 11 parishes in Louisiana. Philip is a certified public accountant and has been with Southern Ag Credit since 2008. He began his career in public accounting in 1998 in Ridgeland, providing services to small businesses and farm credit institutions. Welcome, Mr. Morgan, and I will look forward to your hearing and testimony today.
Thank you. I'd like to introduce Mr. Jace Wagner, who is President and CEO of Compeer Financial. Mr. Wagner is also representing the Farm Credit Council today. Compeer Financial is a farm credit cooperative serving agriculture and rural communities. Compeer provides financial services throughout 144 counties in its service area, which includes Illinois, Minnesota, and Wisconsin. Jace was named CEO of Compeer in September of 2022 and officially began that role in just January of this year. Prior to serving as CEO, Mr. Wagner served as Compeer's Chief Financial Officer, and Jace lives in Minneapolis with his wife and children, probably less than 2 miles from where Archie and I live. So welcome, Mr. Wagner. And now Senator Hyde-Smith will introduce Mr. Cole.
It's also my pleasure to introduce today Mr. William Cole from Batesville, Mississippi. William is the chairman of the Crop Insurance Professional Association and has served as a crop insurance agent for 28 years. He also owns and operates a family farm where he grows rice and soybeans and runs a cow-calf operation. William is a director of the National Cutting Horse Association and an elder in his church. He lives in Batesville with his wife Karen and has 2 adult sons. Thank you, Mr. Cole, for being here today, and I certainly look forward to your testimony.
I'd now like to introduce Mr. James Corin, who is president of NAU Country Insurance. Mr. Corin is representing the American Association of Crop Insurers today. Headquartered in Ramsey, Minnesota, NAU Country is a national leader in supporting farmers through risk management. NAU Country is currently licensed in 48 states and employs over 750 field and office staff across the country. Mr. Corin's background includes 22 years as a CPA, and as president of NAU, he is involved with the board of directors for National Crop Insurance Services, where he's past chair. The American Association of Crop Insurers is active with the Midwest Council on Agriculture. And next we have Mr. Jason Medor. Am I saying your name correctly? Metter, pardon me. Mr. Jason Metter, who is head of Rural Community Insurance Services for Zurich, North America. Mr. Metter is representing the Crop Insurance and Reinsurance Bureau. Headquartered in Schaumburg, Illinois, Senator Durbin sends his regards, by the way. Zurich, North America's Rural Community Insurance Services helps farmers manage risks by offering a wide range of products. Through the Rural Community Insurance Services, Zurich's Zurich, helps farmers in all 50 states with a network of 3,600 agents. Mr. Metter splits his time between Anoka, Minnesota and Schaumburg, Illinois, and is responsible for driving the overall strategic direction of Zurich North America's crop insurance business. And earlier in his career, Mr. Metter served as a lieutenant in the United States Army. So you will each now have 5 minutes for your opening statements. There's a clock in front of you to help you keep track of time. And know that your full written statement will be made part of the record. Mr. Barker, you are recognized for your opening statement.
Chairwoman Smith, Ranking Member Hyde-Smith, and distinguished members. As Senators Ernst and Grassley know, Iowa's 86,000 family farms average 350 acres. But those over 250,000 in sales average 1,000 acres. Now in Iowa, we're the largest producer of corn, pork, eggs, ethanol, and biodiesel, and we're second largest in soybeans. Now, today, ICBA's key principles include a well-funded safety net and crop insurance program. We want to enhance USDA guaranteed loan programs, and we'd like to reject the Farm Credit System's proposals to engage in non-farm lending. Crop insurance is essential for farmers and lenders as it allows producers to qualify for operating loans. With extremely tight margins and incredible risk in agriculture, bank regulators insist borrowers have crop insurance to repay their loans. Insurance payments may not be large enough to make farms whole, but they're enough to keep farmers intact to survive another year. That's why community banks say, whatever you do, don't harm crop insurance. Now, regarding USDA loans, farmland in my area sells for an average of $12,000 an acre. A 1,000-acre farm costs $12 million. A 350-acre farm costs over $4 million, which is twice what a USDA loan provides. We urge Congress to raise the guaranteed real estate loan limits to $3.5 million on owning and guaranteed operating loans to $3 million indexed to inflation. Now, how can guaranteed loans help farmers, particularly young beginning farmers? We worked with a struggling young family using a guaranteed loan to restructure their debt. Since the guarantee, we've had 2 exams, and examiners could not believe the progress this struggling farm made. They're now one of our strongest customers, and without that USDA guarantee and our local USDA officer, that family would likely not have survived. Today, on behalf of ICBA, I'm excited to propose a new program to speed up loan approvals with USDA called a USDA Express program, modeled after the SBA's Express program, which has worked very well. A 50 to 75% guarantee could be used instead of USDA's 90%, but USDA would approve the loans within 36 hours because lenders would make the credit decision, and loans could total a cap of $1 million. Finally, we urge Congress not to expand the powers of the Farm Credit System by sidestepping the regulators' case-by-case approval and open the floodgate to making essential community facility loans. USDA defines community facilities as a public improvement operated on a nonprofit basis, but FCS seeks to loan to facilities whether operated on a nonprofit or for-profit basis. Now, these loans could be fire stations, schools, healthcare facilities, housing, apartment complex, restaurants, sports facilities, stadiums, gas stations, and more. This broad authority could drive community banks right off Main Street. FCS proposal only requires a single non-FCS lender to participate. That could be a large mega bank or large credit union implementing a national program with no local bank involvement. An Illinois banker commented the past 3 years, their bank funded the school district for buses, hospital for infrastructure, economic development corporation for building a daycare facility for 185 kids. They used leasing arrangements, USDA rural development guarantees, local financial institutions, and the Federal Home Loan Bank of Des Moines. Now, these funding sources, plus the municipal bond market, were fully sufficient to fund all of those projects. A Virginia banker stated, "Community banks fund these projects. The bank loaned to every single community facility in the area. The community facilities lending space is full of lenders who step up in a bid process typically to finance these projects daily across the United States. Now, will FCS pay taxes on these loans as the bank community does? FCS also is aggressively using tax-advantaged cash management accounts to undermine the deposit base of community banks. Driving community banks out of rural America by leveraging GSE tax and funding privileges, decimating loan portfolios, and pilfering customers and deposits is akin to taking a wrecking ball to the economic vitality of our small rural communities." Thank you.
Thank you. Mr. Morgan.
Thank you. Madam Chair, Ranking Member Hyde-Smith, and other distinguished members of the subcommittee, thank you for your hearing this morning. My name is Philip Morgan. I'm the President and Chief Executive Officer of Southern Ag Credit based in Ridgeland, Mississippi. Southern Ag Credit provides financing to and other services to over 4,200 farmers, ranchers, and rural home buyers in 50 central and southern Mississippi counties and 11 parishes in northwest Louisiana. Southern Ag Credit is a member of the Farm Credit System, created by Congress in 1916 and charged with a mission to support rural communities and agriculture with reliable, consistent credit and financial services today and tomorrow. As a cooperative, we are owned by our customers and exist to support their farms and ranches. As owners, our customers share in the success of their cooperative. Last year, Southern Ag Credit returned a record $11.9 million in cash patronage dividends to our customer owners. In the past 5 years, Southern Ag Credit returned $53.5 million in cash patronage dividends to its customers. The remainder of our income was retained as capital in the co-op to support more lending to customers. The future of American agriculture and rural areas depends on a new generation of farmers and ranchers. We are committed to meeting the needs of young, beginning, and small farmers. Our years of experience in rural lending provide the expertise needed to finance young, beginning, and small farmers. Through flexible loan terms and working closely with other organizations and government agencies, including USDA's Farm Service Agency, we tailor loans to fit the unique situation of these producers. Last year, 23% of the loans made by Southern Ag Credit went to young farmers and ranchers. 61% went to beginning farmers and ranchers. 75% went to small farmers and ranchers. Overall, 59% of our loans outstanding are to beginning farmers. The future of agriculture requires a diverse set of voices leading our industry. We are proud to partner and provide scholarships to Alcorn State University and Jackson State University, two historically black colleges and universities in our area. Scholarships are offered to full-time HBCU students studying agriculture, business, or a combination of both. Southern Ag Credit recently hosted 2 summer interns from Alcorn State as part of the Farm Credit's Launching Leaders program. In addition to the regular wages, Farm Credit awards $3,500 in stipend to HBCU student or recent graduate hired to intern at a Farm Credit institution. Our goal is to attract more HBCU students interested in careers in the agriculture industry. Presently, farmers and ranchers in our area face elevated operating costs in all commodities, inflated expense from seed, fertilizer, fuel, feed, technology, equipment, interest, and energy are tightening margins for our producers. A shortage of available workers also continues to create farm wage inflation. Agriculture producers in Mississippi and Louisiana need a strong farm bill, including a robust farm safety net to manage the ongoing risks presented by weather, markets, supply chain pressure, rising input prices, and declining profit margins. Crop insurance remains the key part of the farm safety net, and we strongly support efforts to improve this program. Livestock risk protection for feeder cattle is a USDA insurance program widely used in our area for the protection of declining cattle market prices. We work closely with the Farm Service Agency and its loan guarantee program. These guarantees help us to work with customers who face difficulties with their operations and provide an opportunity for young and beginning farmers. FSA loan limits have not kept pace with current prices. We strongly support increasing these limits in the 2023 Farm Bill. The construction cost of a modern poultry house in Mississippi and Louisiana is up 37.5% from those built 3 years ago. Today's young and beginning poultry farming family would need at least 6 poultry houses to earn a $75,000 annual living. 6 poultry houses have a total price tag of $3.3 million, not including the cost of the land or other necessary improvements or equipment. FSA guarantee limits are less than 2/3 of the capital requirement for this size poultry farm. Young beginning farmers almost always require an FSA guarantee to mitigate credit risks. Important credit-related recommendations are detailed in my written statement for the subcommittee to consider as it reviews the Farm Bill's credit title. Thank you very much, Madam Chair, Ranking Member Hyde-Smith, for allowing me to testify today.
Thank you so much, Mr. Morgan. Mr. Wagner.
Good morning, Madam Chair and members of the subcommittee. The good news is there's a lot going on positively in rural America today. I would like to use this time to talk about how we make it even better. Our vision is to help enrich ag and rural America through teamwork and action. My name is Jace Wagner. I'm the Chief Executive Officer of Compeer Financial. Compeer is a member of the Farm Credit System. We provide loans, leases, and other financing products, as well as crop insurance and financial services primarily in the Midwest. We are farmer-led and farmer-owned. Today's hearing offers a timely look at risk management products and credit availability in agriculture as Congress prepares for a farm bill. Let's start with the positives, and then we can talk about ways to improve our actions. First, federal crop risk management programs are well suited to their purpose. Our crop and livestock insurance programs are inclusive and consistent. They create stability and certainty in an uncertain world. Good risk management equals good access to credit. Those two are inextricably linked. We strongly support continuation of the crop insurance programs, but as my wife tells me often, you're not perfect. Many on this panel will have great ideas. Let's use them. Another positive is access to capital for underserved communities. This is expanding quickly. We cited several examples in our written testimony, and they include significant investment into underserved communities and young beginning farmers by Compeer and others in the ag lending market. Additional teamwork and ideas are needed to best support these sets of clients. Now let's talk about the opportunities to further enrich ag in rural America. Credit is available across a wide spectrum of providers. Public programs like USDA and FSA, state programs, private providers like community banks, farm credit, Farmer Mac, and insurance providers, and also non-traditional providers like ag retailers, investment funds, and other participants. Together, these providers, along with the Senate Ag Committee, are part of the Rural Capital Team. This is an essential team to best support agriculture long-term. Together, we can help America thrive. Access to traditional agriculture is stable, but it's still full of holes. Too many of our young and underserved farmers fall through the gaps before they can become stable, long-term farmers. Traditional ag is plentiful for traditional, well-served farmers. Young and beginning need more help. FSA loan programs are effective but need to be updated and streamlined to best support producers, and in particular small, young, and beginning farmers whose needs and financial structures are changing. Succession planning is a real issue. We need FSA to be adaptable to that issue. Serving in the traditional ag market is a team sport. All of us on this panel contribute in some way. Public and private partnerships, as well as private-to-private partnerships, demonstrate what is possible when the Rural Capital Team works together. If we take a broader view and look at a broader credit availability across the country, beyond senior debt, we have only rural business investment companies. They provide equity capital to small businesses. They are an essential part. Fast Ag, based in Windham, Minnesota, is a RBIC junior capital recipient who has grown to over 50 full-time employees and distributes products globally. Midwest Ag partners closely with CEO and owner Cody Fast. Cody couldn't accomplish his goals without the support of RBICs. Let's continue to build on that success and break down artificial barriers to help that happen. As we talk with egg producers and people like Cody, the pain points they tell us about beyond inflation and capital are finding a workforce, basic health care availability, and the ability to earn off-farm income for other members of the family. Senator Smith highlighted those in her statement. Essential community facilities provide basic health care, public safety, and daycare that help solve these problems. Our research suggests the need for capital in this area is bigger than the existing private and public capital available today. Notably, several members of the rural capital team are not present or engaged. We believe creating further access to this capital through clarification of existing authorities can help create the partnerships that are proven so helpful in ag. Let's work on this together. When we do it right, everybody wins. More generally, breaking down artificial barriers to capital should be a goal of the committee. We see examples of that from this committee across the work that you're doing and the bills that you're introducing. We support those. Compeer is invested in ag and rural America, and we know you are too. Please take action, and together we can further enrich ag and rural America, which supports our clients and all members of the rural capital team. Thank you, and I look forward to your questions.
Thank you so much, Mr. Wagner. Mr. Cole.
Thank you, Chairwoman Smith and Ranking Member Hyde-Smith, for the opportunity to testify before this subcommittee today. My name is William Cole. I'm a crop insurance agent from Batesville, Mississippi. My family and I grow corn and soybeans and have a small cow-calf operation. I serve as the chairman of the Crop Insurance Professionals Association, or CIPA. It's the nation's association of premier crop insurance agents writing policies all over the country. As agents, we're very proud to be the primary financial advisors of our farmer and rancher customers. We not only advise farm and ranch families on crop insurance coverage options tailored to their individual operations, but on a full suite of USDA programs, including the commodity title choices, ad hoc programs, along with private risk management products, including wind and hail coverage. Though we're not compensated for services beyond advising on crop insurance, we go beyond our mission area to help our producers because we love agriculture, care about our American farmer and rancher customers. They are what federal crop insurance and we as agents are all about. The stakes today for agriculture couldn't be higher. In recent years, farm and ranch families have had to weather retaliatory Chinese tariffs, pandemic impacts on supply chains and markets, a string of severe and often chronic natural disasters, and high inflation and other factors driving up cost of production. Through all of them, federal crop insurance has been not only the cornerstone of the farm safety net, but arguably the only safety net for producers, given that the commodity title has really lost its relevance to producers because support levels are set based on 2012 cost of production, and so much has changed in 12 years. I believe that farmers and ranchers are truly grateful that the Farm Bill discussions have focused substantially on strengthening the safety net that undergirds the whole agricultural economy. Relative to crop insurance, I think it's extremely important to note that the coverage does not just help farmers recover after a natural disaster. It means so much more than that. Yes, indemnities are a measure of support, but the biggest value to crop insurance is the $200 million in liability protection that is in force. This is the element of crop insurance that allows farmers and ranchers to obtain credit, invest in their operations, to better market their crops, and to avoid the kind of asset-based lending that contributed to the 1980s farm financial crisis. Imagine a world you live in without something as basic as insurance. And that is where farm and ranch families would be without federal crop insurance. As vital as crop insurance is to farmer and ranchers, I'd submit that it's also good for the taxpayer. Farmer and ranchers have real skin in the game, paying some $6.7 billion in premiums alone last year. So as you begin the important work of crafting the 2023 Farm Bill, we would respectfully suggest ways to strengthen the safety net in ways that are both meaningful to producers and taxpayers. First, let's work to narrow the deductibles that farmers and ranchers face to increase participation at higher levels to avoid ad hoc disaster programs. And second, let's urge RMA, private sector developers, and producer groups to work in a concerted way to use current legal authorities, including R&D and the 508H submission process, to help ensure that crop insurance works effectively for all producers, regions, and commodities. This, too, will help avoid expensive ad hoc programs. And finally, Let's correct the serious and unsustainable flaws in our A&O system to ensure that agents and loss adjusters can continue to provide the excellent service that is one of the core pillars of federal crop insurance. As Congress noted in the omnibus bill last fall, USDA has the legal authority to provide annual inflation adjustment and equitable relief for specialty crop policies without opening the SRA, and the department must exercise this authority. From 1938 to 1980, crop insurance struggled. But in 1980, when the crop insurance was turned over to the private sector, it began to take off and became the vital program to farmers and ranchers that it is today. Fixing this A&O issue is critically important for the infrastructure, companies, adjusters, and agents that will support this vital program to meet the needs of the producers in the future. Thank you again for the opportunity to testify before you today. I cover more issues in greater detail in my written testimony, and certainly happy to answer all your questions on these issues. On behalf of SEPA, we are grateful for all that you do for the hardworking ranch and farm families across this country who feed, clothe, fuel the nation and so much of the world in a manner that is truly unrivaled in history. Thank you.
Thank you, Mr. Cole. Mr. Corrin.
Chairwoman Smith, Ranking Member Hyde-Smith, also Chairwoman Stabenow, and the members of the Subcommittee on Commodities, Risk Management, and Trade, thank you for the opportunity to testify on federal crop insurance and the vital role it plays in America today. My name is James Korn. I'm the president of NAU Country Insurance Company, insuring nearly $45 billion of liability on behalf of America's farmers and ranchers. I'm speaking today on behalf of my company and the American Association of Crop Insurers, a trade association with membership that includes companies, agents, reinsurers, and others involved in the marketing and servicing of federal crop insurance. I am truly honored to be here today, and I'm thankful for the support you've provided America's farm and ranch families, and in turn, the rural communities in which they live. Without crop insurance, many rural communities across our great nation would not exist as they do today. NAU's roots go back to the beginning of crop insurance when the company's founder, James Deal, working with Congress and the Carter administration, helped craft and pass the Federal Crop Act of 1980. Today, crop insurance covers over 90% of production agriculture in America. Crop insurance succeeds through the tenets of flexibility, affordability, and availability. On flexibility, last year, farmers paid nearly $7 billion in premiums to purchase both individual and group-rated coverages they felt fit their operation and risk management needs. Farmers have a considerable amount of flexibility in tailoring coverage that best fits their operation. And while this variety adds complexity, it's essential to ensure the program is available to all. On affordability, without the safety net for our farmers and ranchers, grocery shelves could quickly empty after a bad growing season across America's heartland. Through the public-private partnership that is federal crop insurance, farmers can better afford coverages they need. In addition, farmers shoulder a significant share of premiums, offsetting costs to the taxpayer, ensuring crop insurance can survive and expand. On availability, private sector delivery and capital are key components to the success of crop insurance. NAU and our competitors invest billions of dollars in rural communities, shouldering the costs of operating crop insurance in its entirety. In addition, we put billions of dollars of capital at risk annually. For this actuarially sound program to stay viable, it is important that the formula provides enough return to cover our costs and a reasonable long-term rate of return on the billions of dollars of capital we invest. Despite the effectiveness of crop insurance, opportunities do exist for improvement. Number one, the crop insurance industry continues to work with producers and commodity groups to enhance and/or expand coverages for crops on all producers. With higher participation, we can reduce the need for ad hoc assistance in case of a disaster. Importantly, investing in crop insurance is more efficient for taxpayers and provides a level of security to our farmers that ad hoc programs simply do not. Number 2, crop insurance has been operating on administrative reimbursements that have been stagnant since 2015. This has occurred during a time of significant inflation in every aspect of our business. Discussions are taking place regarding an inflationary improvement that would help keep our program strong for the American farmer. Number 3, the American farmer has already embraced many environmentally friendly practices, too many to mention in my short time with you today. While we believe further adoption of carbon sequestering farming practices will help guide a better future for farming, we caution that non-market incentives should come from separately funded initiatives that do not detract from the current crop insurance program. In closing, I want to leave you with a reflection that I heard several years ago while attending a meeting of an Australian group called Thankful for Farmers. The program developer said, and I paraphrase, "The typical person may occasionally need a doctor or an attorney once or twice in a lifetime, but that same person 3 times a day, every single day, needs a farmer." I'm proud to be part of a program that supports such a noble and important cause. I appreciate the support the industry has had from members of Congress on both sides of the aisle, and with your support, we have created a public-private partnership that helps protect the American farmer and truly is the envy of the world. Thank you, and I look forward to your questions.
Thank you so much, Mr. Corrin. Mr. Metter.
Chairwoman Smith, Ranking Member Hyde-Smith, Chairwoman Stabenow, Ranking Member Bozeman, and members of this subcommittee. Thank you for allowing me the opportunity to testify today on the importance of crop insurance and the vital role it plays providing risk management for farmers and ranchers. My name is Jason Metter. I'm the head of Rural Community Insurance Services, one of 14 approved insurance providers that sell crop insurance to farmers and ranchers across the country. Our company has a national footprint with more than 1,400 employees across the United States, partnering with over 3,500 agents and protecting more than 100,000 farmers. I believe that crop insurance is the best tool available to farmers to manage the risks they face and to protect their livelihoods. Crop insurance provides a rapid response when losses occur. Private companies are typically able to deliver indemnity payments to farmers in fewer than 30 days after completing loss adjustment. Additionally, private sector delivery of crop insurance allows farmers to choose the company and local agent that best meets their needs. Crop insurance is inclusive. Our industry protects farmers of all types and sizes, covers over 130 different commodities, including the major row crops, specialty and organic crops, as well as dairy and livestock. The crop insurance program functions as a 3-legged stool, where risk is shared by farmers, private sector companies, and the American taxpayer. Farmers pay premium and are billed to purchase crop insurance and must meet a deductible before indemnity payments are made. Private insurance companies deliver the program and bear a portion of the risk. And the federal government discounts premium, making crop insurance affordable for more farmers and bears a portion of the risk with private insurance companies. The result is crop insurance being affordable and accessible for a wide range of farmers and ranchers. Crop insurance is flexible. Farmers can tailor their coverage to fit their specific needs. And if a farmer or commodity organization doesn't believe there is an existing policy that works for them, those farmers can utilize the 508H process to develop a product that does. To this end, more than 40 policies have come to farmers through the 508 process over the last 20 years. Crop insurance successfully meets the needs of hundreds of thousands of farmers today, and we believe can address additional challenges going forward. With that as an overview, I would like to address 3 topics as we look ahead to the 2023 Farm Bill: climate and crop insurance, disaster assistance, and the 508H process. First, as the committee continues to evaluate the intersection between agriculture and climate change, it's important to note that a farmer's first line of defense against climate change is crop insurance. As weather patterns change, having a strong insurance product is critical for farmers. Additionally, there are studies that show that farmers who purchase crop insurance are more likely to undertake climate-smart agricultural practices. As this committee looks ahead to the Farm Bill, I'd like to share the criteria by which we evaluate proposals in this area. First, the intersection between climate-smart agriculture and crop insurance must maintain the actuarial soundness of the program. This is what maintains the program's integrity. Second, intersections between climate and crop insurance should be incentive-based, not mandated. Finally, new climate initiatives should be funded on their own terms. Money from the crop insurance program should not be used. In terms of meeting these criteria, we believe the 508H process, when used as intended, can enhance the intersection between climate and crop insurance. We've seen recent examples of this process at work with the approval of both a sprinkler irrigated rice endorsement and split application nitrogen endorsement. My second topic is crop insurance and disaster assistance. the last several years have seen a drastic increase in ad hoc disaster payment. It's only prudent for this body to be looking at the next Farm Bill for ways to plug these gaps in the safety net. We ask that you consider crop insurance as a primary tool. We know we can't solve every problem that exists in agriculture, but crop insurance is a track record of delivering assistance to farmers in a predictable and timely fashion. Regarding disaster proposals, we discourage the creation of any disaster program that would disincentivize farmers from purchasing crop insurance or that would directly compete with existing crop insurance products. And we'd oppose the creation of any disaster package that is funded by cuts in crop insurance. Finally, regarding the 508H new product development process, we're interested in working with Congress to ensure industry engagement during new product development and rollout. Our goal is to have a functional process that will bring innovation to farmers and for the process to be consistent with the sound business practices that ensure we continue to be good stewards of the taxpayer dollar. In the past, companies have been faced with implementing new crop insurance products over a compressed time period with no advanced evaluation or input on product and possible implementation hurdles. The result is that some new product launches have not been as successful as we would like. For the sake of our farmers, we want to see successful product launches in the future that meet their changing needs. In conclusion, I would like to thank the subcommittee for your continued support of crop insurance and for your willingness to seek the perspective of the crop insurance industry. We stand ready to work with each of you as we head into the next Farm Bill. Thank you.
Thank you so much to all of our panelists. We'll now begin a round of questions from the senators. Each senator will have about 5 minutes, and I will defer my first questions to Chair Stabenow.
Well, thank you. Thank you very much, Chairwoman Smith and Ranking Member Hyde-Smith. Always wonderful to be here with my Ranking Member Senator Bozeman. I appreciate your allowing me to go ahead. I'm juggling 2 committees, as all of us do at various times this morning. And first, I have to say welcome to all of you. And the good news is, overwhelmingly, we hear that crop insurance is the #1 risk management tool for farmers. So you're doing a good job of whoever you're talking. It is overwhelmingly what we hear, and I happen to agree with that as well. Throughout my time on the committee, I've been extremely supportive of crop insurance and have worked really hard to expand it. And certainly for us in Michigan, specialty crop insurance has been really important over the years. And in 2014, I created a whole farm revenue protection plan, which has been a key option for diversified producers. And so I'd like to start with that. And Mr. Cole, I'd like to ask you to dive in a little bit deeper on the question of how we go about this type of insurance. And you talked about the workload relative to specialty crop policies generally has increased dramatically, and noted your organization has specific suggestions to help simplify coverage and make it more accessible. So could you talk about the workload connected in selling whole farm policies, and if the workload affects what type of policies that agents are selling, and any suggestions that you would have for simplifying that process?
Yes, Senator. As you know, I'm from Mississippi, so we don't have a lot of specialty crops in our area, but I can tell you—
A lot of catfish.
Yes, ma'am, that's right. But now, through our association, my fellow agents that are into specialty crop really work hard. And the unique thing about crop insurance is through the 508H process, anyone that has a good plan or proposal can submit it, and it goes through the process. So it's continuously evolving and improving in the specialty crop area. And we're reaching out to more crops, as these guys have noted. There are more crops being insured, more programs being added every year. Recently, this has been a big success. They improved the hurricane assistance in the coastal areas to include tropical storm coverage, and that's been a big help. So that's a new issue that we've had, or new program that we've had that's been added. One thing on the whole farm that's, especially in your area of specialty crops, that's really been embraced. And some of our agents that we've been talking to have noted that the coverage cap on WFRP might need to be removed or raised substantially to include the bigger specialty crop operations, which in turn would lower the cost and the rates for a lot of the specialty crop areas.
Thank you. Thank you very much.
Yes, ma'am.
I want to ask a broader question now, because I'm very confident that we're going to be able to work together on this committee and be able to move forward a farm bill, bipartisan farm bill that works for those across the country. My bigger worry right now is just the economic environment in which we are in with all of the discussion about default and so on. So we heard that the Fed Reserve Chair, Jerome Powell, said yesterday, no one should assume that the Fed can really protect the economy and financial systems and our reputation globally from the damage that a U.S. default might inflict. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. And so, Mr. Wagner, Mr. Morgan, Mr. Barker, could you talk a little bit about the implications to farmers and our ag credit system generally in terms of interest rates and credit availability if, in fact, the federal government were to default on its debts?
Sure. Thank you, Senator. Is my microphone on? As far as interest rates, the rapid rise in interest rates over the last 12 months will impact every operator that we have. Any operator we have with an annual operating loan, whether that be cattle, whether that be row crop, right now is facing interest rates that are more than 2 times where they were at the beginning of last year. We also have a number of long-term real estate loans that will reprice this year as their pricing, original pricing expires, and there's an opportunity to reprice that. They will be facing much higher interest rate costs. In some cases, we will have a number of producers who will face both of those, both higher operating line costs plus real estate interest rate costs. Through that, Farm Credit, we remain very well positioned to be able to weather that adversity with those borrowers as we continue.
Thank you. Mr. Barker?
Yes. Senators, that is a big topic for us as well. Our friends in the Farm Credit System have a better funding source than we do using the bond market, where ours is the local savings and CD rates that we have to pay. We are proposing a new bill. We have an acronym of ACRE. Some of you may have heard that. We've been on Capitol Hill promoting that. What we're asking for is that the interest on all rural ag loans and real estate in towns of 2,500 or less be tax exempt. And we've calculated that could mean the difference of 1.5% to 2.5% lower rates for our folks. And that is another tool that we would love to use for beginning farmers and our lower income families in our towns.
Mr. Wagner, did you want to respond?
I'll take a little bit different tack. I think the risk-free rate, which is what's driving our borrowing costs, impacts farmers every day. So the higher that goes, the more they're impacted, and it tends to compound because that drives other risk-free rates and borrowing for other parts of ag as well. Cost of fertilizer, cost of seed, all of those things are impacted by that risk-free rate. The higher that goes, the harder it gets, and that's something we're actively trying to work against, as I'm sure you are as well.
We are. And is it fair to say no one thinks that the U.S. defaulting is a good idea for farmers and ranchers? Okay, thank you, Madam Chair.
Thank you very much, Chair Stabenow. Senator Hyde-Smith.
Thank you very much. And my question is to Mr. Morgan. Can you please expand on the importance of crop insurance and livestock risk protection to your borrowers?
Thank you, Senator, for the question. Every year, first of all, Farm Credit strongly supports the crop insurance program. And every year that our farmers, our row crop farmers go in and they plant their seed and they grow whatever their commodity is, they are risking the full equity or material equity of their farm in that crop. And without that crop insurance, any one year that they have a disaster or a disease or a market issue, that crop insurance will cover them and assure that they will be able to continue the next year to plant that same crop. The livestock risk protection is very used in our area, very popular. Farmers use that, cattle producers use that to hedge against decline in market prices, which also is very important to us as a lender.
Thank you. And Mr. Cole, you have a pretty unique perspective here as both a crop insurance agent and a producer. And what are some of the unique challenges faced by producers in the Mid-South? And how does crop insurance meet those challenges specifically to the Mid-South?
As you well know, we have more than, we're blessed with an amount of rainfall. Sometimes we're overly blessed with the amount of rainfall. And so our crop insurance customers are primarily worried about flood damage, planting the crop and then losing the crop. And so we are constantly working with whatever their crop mix, because as you well know, in the Mid-South, we could rotate 3 to 4 crops on the same farm. So we have to sit down, depending on what the market drives, and work with our farmers every year to custom tailor what their best coverage for them, where their loans with these guys will be collateralized to an amount where everybody is protected.
Yeah, they say 55 inches annual, but I think we may have to go up on that one.
Yes, ma'am.
And Mr. Metter, one reason it is critical to preserve access to risk management tools in this farm bill is that these tools help preserve family farms for the next generation, what I think is so critically important. And I'm pretty passionate about getting young people involved in both hands-on farming and industry-type jobs like yours. Please share more about the RCIS apprenticeship program. I think so interesting.
Thank you, Senator. So RCIS, as part of Zurich, we have an apprenticeship program for young adults or returning people from the military. So you could be a high school graduate, a military veteran, or somebody that wants to change careers. We have a program where you can come join RCIS and you're able to get an agriculture degree from Northeast Iowa Community College. We pay for the degree. Why you get that degree, you work part-time for us, doing a job, getting exposure to whether it's underwriting, claims handling, finance is open at this point, marketing. And then after your 2 years, you have a full-time job working for RCIS. We require you to work for us for 1 year, and hopefully many, many years beyond that, but it does allow a path for new people to come into the industry, young people, diverse people. It's kind of a wide range that we're really looking for. This year, we're hiring 18 individuals across the United States in different locations in many, many different fields. So that's really our focus, to bring people into the industry.
I just really want to commend you for that. Thank you so much.
Thank you.
Great, thank you so much. So I want to dive in a little bit about into some of the comments that several of you made about the work we need to do to make these risk management tools more readily available, work better for small farmers, beginning farmers. Mr. Wagner, could you just go into a little bit more detail? You talked about some of the examples that you have about the work that Compeer does to think about how we can help to overcome some of the hurdles that, that young farmers and beginning farmers face, and what you've seen that works.
Yeah, so we're actively involved in this area. I think there are a couple things that I would say are required. So first, you have to be engaged in that work. And so we have a dedicated team, our emerging markets team, that is dedicated to that. Cy Tal and Paul Dietman do a great job of working around. You have focus. You have to then build trust. These communities do not just accept you and say, give me your money. They want to work in a sustainable fashion. And so you have to build trust, sharing knowledge, talking about the programs, helping get them networked around the country and with these programs to help them understand what's possible. And we have to have commitment. You have to continue to show up, and you have to continue to do that. And so I think what it comes down to at the end of the day is flexible programs. And so it's incumbent upon capital providers to have the flexibility to adjust to those communities and work through those issues to try and find ways to support them. Reggie, who's our producer in the written testimony, didn't have much of a credit balance, didn't have much of a credit history. And so we were able to work with him, get him started. He brought others into the community, and they are regenerative poultry items within the Twin Cities. It's a great story. It's an example of how you can get introduced, you can build trust, You can create flexible programs, and now they are off and running, and we hope that they continue to succeed as a traditional farmer where they have more access to capital.
I think you mentioned also, I think you mentioned something about how we need to make sure that FSA has the flexibilities as we are looking at this big generational transition from in farms. Could you just talk a little bit more about what you think that ought to look like?
Yeah, so absolutely. So there are specific items within the FSA programs which require kind of an owner-operator, issue. And so when you have extended families, estates, oftentimes have multiple kids. I'm from a family of 3, so you get that. So how do you pass that land on and maintain somebody on the farm? And so the specific items, there's many different ways that farmers are choosing to do that, but oftentimes many of those things they're selecting force them out of the FSA programs. So it's really about structuring something that's flexible for the new age around liability protection with LLCs and partnerships, but also just that flexibility around family and partnerships in those programs and not having it be kind of one farmer, one piece of land. I think that's where the flexibility really is needed, and I think we can do that pretty easily and still stay within the intent of the original programs.
Thanks so much. Mr. Corn, I want to follow up a bit on a question that, and you're welcome to respond to this as well, but follow up on a question that Senator Stabenow was asking about whole farm insurance and that risk that whole farm revenue protection is nearly a decade old. I think that USDA's risk management agency has been championing this, but we're seeing that there's just still some work to do there. And I've heard that because of administrative requirements and some of the financial information required, it just can be sort of burdensome. So could you just talk a bit about that and anything you think we ought to be doing to make that work better?
Thank you, Senator. So and we appreciate the work that the committee did to get whole farm active. One of the tenets of crop insurance is to make sure we get the pool as large as we can so we can spread risk and get everybody in the program benefiting all. And in some of the specialty crop areas, there was a need up, especially in the Northwest and in Northeast parts of the country, where specialty crops like apples and grapes and things like that are grown. There was a need for additional coverage. And because it doesn't apply itself to the normal APH kind of coverage that's in crop insurance, Whole Farm did make a push to get more people in the program, and for that, it was successful. I think last year we wrote, as an industry, about $125 million of coverage on whole farm. I can tell you that this year, with the changes that we worked with RMA to put into place with regards to the micro whole farm and some of those things, we are already over that number. I looked at our own book of business, and from last year to this year, we're up 18% on whole farm. So it's maybe slow to grow, but it fills a void that we needed in crop insurance, and I think it's working, Senator.
Thank you so much. Senator Bozeman. Oh, he's left. Senator Ernst.
Thank you, Madam Chair and Ranking Member, and thanks again to the witnesses for being here today. And Gus, Mr. Barker, thanks for being here. And in your testimony, you did do a very nice job of describing how productive Iowa farmers are, but you did also, in your remarks, mention the high cost of land in Iowa. And that makes it particularly difficult for our young and beginning farmers and small farmers. There was a 2022 study from Iowa State University that gave the land value. It was called the Land Value Survey, and it gave the cost of an average price per acre of Iowa farmland. And it started, average was around $11,000 or so per acre, but it ranged up to $30,000 for high up in Northwest Iowa. I know you're familiar with some of those costs. And according to the most recent USDA census data, which came out in 2019, we know, and I've heard this before, but the average age of an Iowa farmer is just over 57 years old. So my sister and her husband are, those average Iowa farmers right there. So, Mr. Barker, from your experience, how can we better help and incentivize young and beginning farmers so that they start and stay in agriculture? We get a lot of these young people, they'll start in farming, but they find that they can't often stay in farming. So are there special financing terms or other unique programs that are being offered to keep these young people in agriculture?
We use a variety of programs, Senator. We've used a partnership with USDA where they provide a down payment and we provide the funding for a purchase of hog facilities. And the young man's willing to work. They have to be willing to work. It's not something you can just sit in the office and manage. They've got to be willing to do that. We use the programs that have the guarantees. We feel the new USDA Express program would fill a niche. Some of the opportunities my young farmers have had come up are under a deadline because there are multiple people willing to pay the price. And for a young farmer who applies for a USDA loan, they don't come through very fast. And if that's delayed, that seller is going to go somewhere else where he knows he can get the money fast.
And Gus, if I could interrupt there,
Yep.
just so folks know, how long does it typically take for that process?
We estimate 60 days minimum to
yeah.
get that done. In a worst-case situation, at times when funding is low, it could be 6 months. It is really a pretty tough time. The paperwork is intimidating. And so if the lender can use their own forms, have a 36-hour turnaround, that young person has the best shot of getting something purchased for them. Not everybody has family members that are willing to help. The state of Iowa does have a program that may be tailored at the federal level that gives a tax break to the seller of the farm to the young farmer. For a 5-year term, they get a tax break on their income tax as a tax credit. And that has worked well for some of the beginning farmers in Iowa.
Yeah, that's good. Thank you. And Mr. Wagner, how about you?
Yeah, so we like the Express program, by the way. I think that's a great idea, something that we would definitely support. I think what we look at it is we do a lot of different structuring around young beginning farmers. So down payment assistance was it tailored the cash flows to the right thing. But more broadly, we want to provide off-farm income opportunities for the partner or the spouse who's working in that rural community. And if we can do that and have that off-farm income and contribute to them getting on their feet as full-time farmers, and as their operation grows, then they can come back and be full-time. So if you look at it's a whole look. Much of the farm income around the country is off-farm, and we need that support and that strong rural community in order to help those producers start and stay on that farm, as you say. I think it's a key item to look at it holistically versus just on the farmer aspect, because that's just not broad enough. You can't get started the way it is with ag today and the prices that we have to pay. It has to be kind of a collective working hard and working 2 jobs or 1 job to try and make that work, and is quite often the solution. And I think that's something we're producing. We're trying to support that growth in those rural communities, as well as providing specific programs for young and beginning farmers.
Yeah, thank you both very much. I think it's important that folks out there in non-ag country understand how difficult it is to really get into farming and then be able to thrive in farming. So thank you very much. Appreciate that. Thank you, Madam Chair.
Thank you, Senator Ernst. Senator Tuberville.
Thank you, gentlemen, for being here today and helping with this all-important farm bill that we're getting ready to attack. I guess that's the way we would call it. As we heard during Tuesday's hearing, protecting the farm safety net is the top priority for commodity groups across the country. For this farm bill, crop insurance programs represent only 7% of the total $1.5 trillion package. We cannot have an effective and functional safety net without stabilized crop insurance coverage for our producers. It's not going to happen. Also, we must ensure our producers have access to capital and risk management tools to weather rising input costs and skyrocketing prices for farmland and equipment. Mr. Wagner and Mr. Morgan, I hear from Alabama poultry producers about the rising cost of poultry houses. 4 houses can cost up to $2.5 million or more. In your testimony, you mentioned the need to increase FSA guaranteed loans. What's appropriate level of FSA guaranteed loan limits?
Thank you, Senator. Farm Credit is asking for an increase up to $3.5 million for construction and up to $3 million for operating. In my statement, I indicated a similar example of what it takes for a poultry farmer to make $75,000. According to the U.S. Census Bureau, the household median income for the last 2 years has been about $70,000. So for a poultry producer, they've got to go in and make a $3.3 million investment in order to achieve the same level of median income. An increase in the guarantee amount which is currently about a little over $2 million, would significantly cover the cost of those houses and be an entry point for so many young beginning and small farmers. If I could, in Mississippi and Louisiana, we have a concentration of integrators and poultry houses and great opportunity there. And that's just a really key item for us with this farm bill.
Thank you. Mr. Wagner, you got anything to add?
Just maybe quickly, broader perspective, when you have a construction loan and an operating loan and those two things combined, that limit still applies. And I think where we have young beginning farmers who may have some help on the land loan may not have that same help on the operating loan. And so that limit is real. And as the cost of inputs and the cost of land move up, as Senator Ertz indicated, you run into those limits really fast. So updating is important.
Thank you. Mr. Barker, thanks for wearing the appropriate blue and orange tie today, by the way. I was co-sponsor of ECOR last Congress and look forward to supporting ACRE this Congress. Mr. Barker, can you share with the committee how ACRE could allow community banks like yours to better serve rural communities in your market?
With the lower interest rate, with those interest income tax-free to the bank, we could pass that on to our borrowers. Any cost savings that we could provide those beginning farmers is essential. We can't control the input costs or anything else. The only thing we can control is the interest. And that is one way we could do that, by having that interest tax-free to the bank on the ag side of things. Also in my markets, my towns are all under 2,500 people, and the housing situation is very, very difficult there, and it would really benefit my folks who have very limited means of income in making a purchase and affording the houses rather than the double and triple interest rates they see now.
Thank you. Mr. Cole, Mr. Corn, or Mr. Metter, to any of you working in the crop insurance industry, as you know, half of the 14 approved insurance providers have parent companies that are owned by foreign entities. I know that some AIPs have subsidiaries in China. Do Chinese entities have significant ownership stakes in any AIPs or their parent companies?
Yeah, go ahead.
I'll take that one, Senator. So RCIS, Rural Community Insurance Services, our parent company is Zurich. Zurich's a Swiss-based company in Zurich, Switzerland. Just a little bit of background on who Zurich is and what our role is with RCIS. So Zurich purchased RCIS in 2016. Prior to the purchase in 2016, Zurich was a reinsurance partner with RCIS going back to 1998, so providing capital to RCIS to be able to support crop insurance in American agriculture. And if I go back further, right, for Zurich in North America, Zurich's been doing business in North America going back to 1912, providing insurance for many things in supporting the United States, many infrastructure projects over time. So everything from the Hoover Dam, Chesapeake Bay Bridge, update to LaGuardia Airport, right? So there is a lot of capital that comes from Zurich globally to be able to support North America. From a business perspective, broadly globally, roughly 90% of Zurich's property and casualty business is in North America and Europe, right? So Western economies, when I look at the life business, there's not as much in North America, but it's more in Latin America, Asia Pacific's, only about 10% of the business or a little bit less, major markets there are Australia and Japan. We don't do business in China. The one caveat to the China question, so we don't have subsidiaries in China, to answer your question very directly. The one caveat to China is we do support our companies that we insure that do multinational companies. If they have business in China, we carry our insurance through an international program to give them protection while they're doing business in China, but we don't do it directly in China. So
Thank
hopefully-
you. Thank you, Madam Chair.
Thank you, Senator Tuberville. Senator Gillibrand.
Thank you, Madam Chairwoman. Over the past few months, we have seen 3 of the 4 largest bank failures in American history. Quick action by regulators and the private sector have allowed for stabilization to a point, but it's clear that Congress must act with some banking reform to guarantee long-term economic stability in the banking sector or risk similar future events. For all the panelists, do these banking disruptions pose a risk to our rural lenders and rural creditors?
Well, from our standpoint in rural Iowa and in talking to my Ag Committee, which is scattered across the United States, we have not seen an impact. Those mega banks were not typical bank management, and we just feel there needs to be a distinguished line drawn in the sand between the risk of those mega banks who are investing in far out ways of doing business compared to what the community bank model has always been. It's been stable. It's survived everything from world wars to the ag crisis and survived that bank model. And we just feel that we are stable. We have not seen withdrawals of major deposits or anything like that. And we just think there needs to be risk-based fees to those big places. We shouldn't have to be tagged on to paying for those failures of those people. We get monitored.
Can I just interrupt
Yes.
you for a second? So I'm not concerned about the large banks right now. I'm concerned about community banks, regional banks, smaller banks. And so specifically, and maybe it's not happened to you in Iowa, for the other panelists, have you seen capital flight to larger institutions? Are you concerned with the rising interest rates that it will destabilize your regional banks or your community banks or your partners? Because we have data and information that they have not reached stability. And it started at Silicon Valley Bank, but then it went to regional banks in New York. It went back to a regional bank in California. Now, all these regional banks are having a reduction in their stock price, as much as 50% loss. So there's enormous instability in the regional banking system today because of interest rates and because misaligned investments. You may have had very prudent investments and you may be extremely stable, and there are many banks like that I know in New York as well. But for the rest of you, have you seen any flight of capital? Are you worried about misalignment with interest rates? And are you seeing any impacts that affect your business? Go ahead, Mr. Morgan.
Yes, thank you, Senator. I would say that community banks are an integral part of our small towns and rural communities in Mississippi. But of course, anytime there is discussion of a credit crunch, whether it's ag or non-ag, that bothers all of us. I will say that there is conversation among our communities regarding those concerns. I can't necessarily speak to them because I'm in Farm Credit, but I can tell you that Farm Credit is well positioned right now, well capitalized, and does not have the same concerns. And we're well positioned to continue to support local
Great.
agriculture.
Thank you. Mr. Wagner?
Yeah, the impact is real. So when you have contagion like you have, I think you start to see increase in spreads. People require more for the risk that's being taken. Farm Credit is part of that. Our GSE spreads have expanded because of that, which is costing our farmers money. And so we're trying to do what we can to move through that. I would say the impact is not real acute right now. It is around the edges, newer producers coming in, newer loans that are being funded. But it is something we're actively watching. We're working with our district bank, Agribank, to monitor their risk and understand what's going on there so that we can protect what's going on. I think what you're seeing more broadly initially is everyone talking about risk And when everyone's talking about risk, you tend to get more conservative.
Yep.
And so it's immediately impactful to your young beginning farmers.
And for the rest of you three, has it increased your costs? Has it increased the cost of access to capital? How is it impacting your customers? Mr. Cole?
Yes, our customers were able to secure, for the most part, without any issues, production loans for this year. But now it's just apparent that the high rates are going to have a severe impact on, especially with the cost of production just dramatically rising. So it's going to be an issue. There's no doubt.
Mr. Corn?
Yeah, Senator, there's no doubt the change in the banking industry has impacted capital. And as such, for example, this year our reinsurance costs are up probably 40%.
Yeah.
And you see it more in property and casualty because the crop industry has better performance. But everyone was hit with that this year. So we're seeing our cost of capital really go up.
Yeah, and just the one point that I had, I agree with Jim on the reinsurance costs. You know, from our perspective, or my perspective, being part of a large multinational company, I do have access to broader capital that, you know, probably impacts me a little bit less, given what we actually do. The other point that I want to make from a banking versus insurance sector. So in the insurance sector, you know, our investments were focused on assets matching liabilities. So some of the liquidity issues that banks have, insurance companies naturally don't have, given how we manage our business. So I just wanted to make sure that that point's out there as well.
Thank you, Madam Chairwoman. Thank you, witnesses.
Thank you, Senator Gillibrand. Senator Bozeman.
Thank you, Madam Chair, and we do appreciate you all so much. I apologize for running in and out. We've all got about 3 or 4 hearings that, in fact, I was with the NIH and folks like that. I'm trying to get a question in there about the high rate of suicide amongst the ag community, or what we're doing to try and focus on that, do a little bit better job. Mr. Wagner, a theme we have heard come up more than once in testimony is how producers are getting squeezed by higher costs, due in part persistently high inflation, interest rates, cost of production has increased. How important is it that we ensure farmers and ranchers have access to a level of credit needed to keep pace with the current inflationary environment? And I would add how important it is, especially to make sure that our risk management tools, crop insurance, all of their other risk management tools are up to date in this really generational inflation rate, generational high interest rate, generational high input costs. The list just goes on and on.
Yeah, it's very important that we have that access to capital. As we talked about, that rural capital team is important. So building up and having access to many different options across the spectrum is very important to help alleviate some of that issues that you have with specific sectors, specific groups that may have problems as inflation moves up. I think we're very focused on trying to adapt the programs, right? So we haven't had significant inflation since the 80s, and many of the programs and structures were not set up with those in mind. And so I think this is a great opportunity to relook at some of those options and provide that flexibility up and possibly down as you see things move over time. And so things like FSA loan limits, things like, as we look at crop insurance and some of the things that are moving around within those products as well. We want to serve our farmers. We want to try and get to that to best serve them in the best way. And flexibility is oftentimes the best way to adjust to rapidly changing markets like inflation and input costs.
Very good. Thank you, Mr. Wagner. Mr. Morgan, similar. Over the past several years, the debt-to-asset and debt-to-equity ratios have increased while working capital is expected to decrease by more than 10% in 2023, according to USDA forecasts. Meanwhile, land values have continued to climb and farm incomes are set to decrease by double digits. While these statistics don't rise to the level of the 1980s farm debt crisis, what can we do to minimize the risk of returning to that type of an environment?
Thank you, Senator. As we see growers and producers, as we see their balance sheets begin to decline, and we see that the equity begin to deteriorate based on high cost and declining margins and so forth, it is just critical that we continue to have the safety net in the Farm Bill. that those producers are in some ways assured that that safety net is there, that they're going to be able to continue as that equity declines. So does the risk of the smaller loss causing a greater issue in the future. And I would also say for entry-level farmers, for our young beginning and small farmers, they need a guarantee that there's going to be a living there, that they can earn as they continue to see the risk increase in agriculture. Thank you.
As lenders, Mr. Barker, Mr. Morgan, whoever, do you see increased scrutiny by the bank examiners with the banking system a little bit shaky right now? You're seeing these balance sheets, and then again, you're having to be a little, scrutinize things a little bit more because of the nature of the beast with the farm economy. Do you see people scrutinizing you more as a result, and that making it even that much more difficult? And another reason that we need to make sure that our safety nets are in place and up to date.
We've always been scrutinized pretty heavily, Senator. And just went
through. You don't know that you can have.
Yeah, I don't know that there's ever been a lull in my banking career, but I did survive the 80s, so I guess that's an accomplishment. But I just finished a state exam, one of the best exams I ever had. But our files are up to date. We have our lenders that are trained, and our customers are well positioned. They've had some very good years, and we hope to keep that sustained, even though I'm in the severe drought area of the state of Iowa. And so we worry about that every year. And the last couple of years, we didn't think we'd have a crop, and we had such timely rains that it made a big difference. But we had the safety net, and that is a question we get asked on every customer from the examiners. Do they have federal crop insurance? And as long as we can tell them yes, they feel much more comfort in that.
Good. Thank you, Madam Chair.
Thank you, Senator Bozeman. My colleague from North Dakota, Senator Hoeven.
Thank you, Madam Chairman. Thanks to both of you, you and the ranking member, for holding this hearing. Thanks to our witnesses. For Mr. Barker, in the 18 Farm Bill, I worked to increase loan limits for both FSA Direct and the guaranteed loans. And I'm looking to work on that again in the 23 Farm Bill. Do you believe that the current FSA loan limits provide producers with adequate access to credit relative to their cost of the production?
Actually, Senator, our opinion is no, that they need to be adjusted upward. The price of land and inputs have just skyrocketed for us, and we're proposing $3.5 million for the ownership and $3 million limit on the operating line for USDA guarantees. And we feel we could live with that, but we'd like it indexed to inflation to keep up in the future. And I think some of my colleagues also mentioned those same numbers.
Is there anybody disagrees that the cost of production agriculture has gone up and we need to increase those loan limits? Just if you disagree, say so. Otherwise, I'll figure you all agree, because it's obvious that's the case. Okay. And then to Mr. Cole, Mr. Korn, Mr. Mader, what would it mean to your producers if crop insurance were weakened? And in fact, don't we need to continue to strengthen it? Isn't it, in fact, our producers' #1 risk management tool?
Yeah, thank you, Senator. I would submit that it's the only viable risk management tool that our farmers have today. And it's so important to our small rural communities. Not just the farmers relying on it. These lenders here rely on it heavily, the tractor dealerships, the seed and chemical dealerships. So it's the underpinning of all of our rural communities to a certain extent.
Yeah, Senator, the higher input costs have definitely put the risk at a higher level in rural America. And our farmers invest more to get their crop in the ground. And, in your area, we've seen a flight to higher coverages through ECO, SCO, some of those plans. And the reason is that the margins are tight on the farm. Input costs are expensive, and farmers can't afford a year where they can't pay their bills.
Yeah, and you make a really important point there. you know, as they get up to higher levels of coverage, it gets prohibitively expensive. So what can we do to enable them to get those higher levels of coverage, as well as what role can supplemental coverage options and enhanced coverage options play? That's I thank you for bringing that up.
Yeah, so we, 3 years back, NAU piloted or sponsored the ECO product, which is a 95 to 86 cover. And we did that through the 508H program. And so when we see the need, you know, I think as an industry, we need to go and see if we can get that coverage expanded. Unfortunately, with ECO, when we went through the process, there was a statutory cap on how much subsidy or premium support the government could provide, and it would be helpful to get that increased, similar to STAX and SCO. That would help a lot. And to be honest with you, I think just about everybody up here in their opening comments said that it's more efficient for taxpayers to put money into the crop insurance program where the farmer is shouldering some of the cost. And so I think it's prudent to look at those ideas and see if we can get there.
Really good point. Thanks for making it.
Yeah, so I agree with everything Mr. Cole and Mr. Karn said. You know, crop insurance is the #1 risk management tool for farmers and ranchers to be able to support whether it's their loans or their livelihood and stability to agriculture going forward. So I think it's critically important. I'll echo a little bit of what Mr. Karn said around the 508H process and being able to bring new and different products to enhance the program, right? That's really what growers would be looking for. He brought up a great example that allows for coverage at a slightly lower cost, which allows them to get a bit higher using SCO, ECO, moving from your specifics to an area-based coverage plan. Those types of things can be done. I'd also highlight things like index products. So when we talked earlier about the hurricane insurance protection wind index product that just added tropical storm this February, right? So those types of things give additional coverage. And then I'd be remiss not to echo again the point on premium discounts. So, you know, premium discounts for some of these products as you get to higher levels of coverage do potentially make it cost prohibitive for some growers to be able to get that, right? And if you're able to increase it, that will or should be able to help address some of the ad hoc disaster assistance that's been needed over the past several years.
Thank you. Mr. Cole, I want to ask you about the A&O reimbursement for insurance companies that provide federal crop insurance. USDA has the authority to provide inflationary adjustments. They haven't done that since 2015.
Yes, sir.
They did it before.
Yes, sir.
It didn't that authority did not magically disappear. They haven't.
Yes, sir.
Talk to me about why they need to use it and provide an inflationary increase for the insurance. We just got done talking about crop insurance being the #1 risk management tool for our producers out there. They need a network of insurance companies out there across rural America, a lot of them small companies, that are willing to provide service to them, right? People that actually know the farmer or rancher they're dealing with, right?
Yes, sir. Yes, sir. 100% agree. And first, I want to start by thanking you and your colleagues for bipartisan support in Omnibus that actually stated just what you said, that the department does have the authority to implement the A&O inflation indexing without opening the SRA. And as you well know, crop insurance program is extremely complicated, and we have very skilled workers that deal with this, and our agencies, most agencies provide benefits, health insurance, retirement accounts, but the problem that, especially in the specialty crop areas, it's very complicated. We work very hard every year to add more coverage, add more policies, but it's a very risky proposition to not be able to pay those employees. So as we're adding to the program, we run the risk of not being able to provide the service to that program. So yes, I 100% agree. We've got to urge the department to add the indexing on the A&O. Thank you, sir.
Thank you, Madam Chair. Sorry for going over my time.
Nope, no worries. Thank you, Senator Hoeven. So we've now completed our first round of questions by the panel. I believe that Senator Ernst has one more question, and I have one more question, then I think we'll be done. I want to just open it up to the panel and get at something that several of you have referred to, which is how important these risk management tools, crop insurance and other risk management tools, certainly they're important to farmers and producers, but they're also really important to rural communities, more broadly. Strong agriculture equals strong rural communities equals just more opportunity, flat out in small towns and rural places. So would anybody like to comment about how you're partnering with rural communities to support local economic development and growth?
Well, I'm in some pretty small communities, so the bank is the majority of the economic development there. Whatever we do impacts our community directly. The next thing we have would be a grain elevator and maybe a small convenience store. One of my communities was lucky enough to have a grocery store built by a regional chain, and that serves every community within a 30-mile radius now. But it's a devastating thing not having the agriculture community around, and they support everything we have.
It's people.
And it is. And at the gas stations, you're going to see 15 or 20 pickup trucks every morning for coffee and comparing notes on what they know and don't know.
That sounds familiar. Mr. Wagner.
Yeah, the rural community is obviously a big part of where we are at. We are doing some specific things around rural vitality. This is a new initiative for me as CEO and for Compeer. We are adding extra oomph to this. So we are building networks. We're working with a group called CETA, which is locally, to build networks around small businesses to support, one, identify what they need, two, to try and work regionally versus locally. We believe that's really an important factor for us, is to work regionally. And then bring capital. We are providing capital to these groups to get started. We're providing low-interest loans to try and help them do what they can to work within those communities to build those. We're also being a voice. We're here talking about rural communities and how we can help them. And so between those three things, we believe we're really focused on driving that rural vitality. Further, we'd love to support rural health care. We're building hospitals. We're building senior care facilities through case-by-case approval. We'd really like to streamline that process and utilize that existing authority more fully.
Thank you very much. Thank you. I'll turn to Senator Ernst.
Thank you, Madam Chair. So for our lenders that are here, in my home state of Iowa, our turkey and our egg producers have been hit hard by avian influenza. And I think we all vividly remember 2015 when it swept through many of our states. And that was my first year in the Senate, and it left a lasting impression. So as you know, once that flock is infected, that farmer-producer has to depopulate the entire flock. And thankfully, the USDA does have an indemnification program. But the farmer is at a loss for income that was expected in outlying years from that flock. So, Mr. Wagner, why don't we start with you? Those poultry and livestock producers are very focused on foreign animal diseases. So we had the avian influenza, God forbid if we ever have an African swine fever episode. So they're focused on those foreign animal diseases, so the preparedness and the biosecurity that comes with that. But can you walk through what you as a lender can do for those producers when the avian influenza or another foreign animal disease strikes?
Yeah, thank you, Senator, for the question. It's unfortunately happening more often. And so our plan is we increase the voice of the customer. So spend time on their farm trying to understand that individual situation. Everyone seems to be a little bit different, and each producer is in a different situation when that arrives. So between working with the USDA and those programs, any insurance providers that they may have, we try and find ways to structure the cash flows to keep that farmer farming out into the future. So it's a consistent thing that Farm Credit does. We work with our borrowers. We try and engage with their cash flows and their opportunities. We look for other programs that may be able to support that and work with them to keep them farming over time. Typically, they've been able to recover, and that's been a really positive sign, both the work of this committee and the support that we have from the government. but also just the support they have from those communities. They'll oftentimes have neighbors and friends help them out as you go through that process. That's something we like to see and have a network to build around.
Thank you. Anything different, Mr. Barker or Mr. Morgan?
Thank you, Senator. I would just say that we continue to utilize really avian flu disaster, whether it's tornadoes, whether it's anything that would knock out the cash flow of that borrower. We have the tools and the availability to move the timing around of when they can get cash flow back and when they can make their payment.
Thank you.
Same thing with us. We make use of any tool we have. It may or may not involve USDA guaranteed programs, but usually they have to restructure and stretch some payments out over a number of years.
Yeah, something always to be aware of, but thank you very much, Madam Chair.
Thank you so much, Senator Ernst, and I really appreciate you bringing up avian influenza. It's an issue that affects both of our states so intensively, and as we are at this, probably all of our states. Exactly. Thank you. Colleagues, does anybody else have any other questions that you'd like to ask? Right. In that case, I want to thank our witnesses again for being here today and for providing testimony, and thank you again to Senator Hyde-Smith and your staff for working with us on these committees this week, and thanks to Ranking Member Bozeman and Chair Stabenow for joining our committee hearing this morning. You know, we mentioned several times that the Ag Committee is lucky to work in a space where there is strong bipartisanship. We are not as partisan as in some other spaces, and I hope that this hearing this week, all of the hearings we did this week, will help to inform us as we build a bipartisan farm bill that meets the needs of farmers and ranchers and small towns and rural places all across the country. For senators who wish to submit questions for the record, these questions are due 1 week from today, which will be Thursday, May 11th. For our witnesses, you will have 2 weeks to respond to any questions for the record. So thank you again, and with that, this hearing is adjourned.